Welcome back. You're still tuned into Mid-Cap Radar. The stock on our radar is Gulf Oil Lubricants. Company reported a strong set of fourth quarter numbers. They maintained a growth momentum for the year with volume growth rate at 2 times the industry. But what's the outlook going forward? What are the growth plans and the capex outlook? Ravi Chawla, the MD and CEO at the company, is joining us now to discuss the same. Mr. Chawla, good afternoon. Thank you so much for joining us. Well, the street definitely liked your numbers, and you spoke about strong growth across all the segments except OEM factory fill. Can you define those growth levels in different segments? What did well for you? And what happened to the OEM factory fill? Why did you see a decline there?
Yeah, so overall, as you said, we have grown 2x the market growth rate, which is around 2 to 3%, 3 to 4 in certain segments. Obviously, lubricants, as the quality improves, the percentage growth is not in line with the growth of the automotive industry, which some of the segments are growing 8-10%. So we saw a lot of growth in our industrial and B2B segments. In our franchisee workshop across automotive, we've obviously shared that commercial vehicle oils, agriculture and motorcycle had an uptick in the Q4. So these continue to grow, and factory fill, where we are majorly supplying when the vehicle leaves the plant, new vehicles, is mainly commercial vehicles where we have seen a dip. And that's about 8 to 10% of our volumes. Otherwise, we have seen green shoots right across all the segments I mentioned. And even the market is growing, some people say 3-4%. That's the kind of growth, which is a positive sign going forward as we see a lot of growth across.
All right, if the market grows at 3-4%, then you still hold on to your volume guidance of 2 to 3% industry, 2 to 3 times industry growth, right? Because then that growth becomes from 9% to 12%.
Well, you're right. So we've been saying that. So that is why I gave a figure of a range. So in some of the segments where we have good market share, we definitely look at 2x the market growth rate. And some of the segments where we have less than 5% market share, we look at higher than that. So on average of that, if the market does grow 3%, we would look at high single digit. And, definitely internally, we try to get the 2 to 3x. So if it is growing 4%, definitely look at double digit volume growth for us.
Right. This is about growth in different segments, and you continue to maintain that positive outlook. What about price hikes? You took the first price hike after 12 to 15 months. First, what led to this? And second, will you see more regular price hikes in different segments, or is it going to be, again, once in 1 year phenomenon?
Last couple of years, we have seen a lot of price hikes. So as you're right, recently the one we had was mainly as a result of we had some increase in the chemicals, additives and other costs like base oil went up a bit. So some of it gets passed on in the B2C segment based on our pricing, and that happens as a 1 or 2 month lag time. The B2B business requires a lot of there's a price variation clause with OEMs, so that happens a bit later. So yes, a price increase has happened in the B2C segment, and we are seeing now that, of course, some of the base oil is steady. So we'll have to wait and watch, but there had been an increase for which we did take an increase in the last month.
Right. So no near-term increases right now, right?
Yeah. So it doesn't look like now, it looks steady, but yeah, whatever has been done, of course, OEM pricing and B2B would depend on the price variation clauses.
All right. What about the battery business? You did about 80 crores in FY24. What's the target for FY25?
So we'd like to, again, market share, we are amongst the top 5 players in the replacement market in two-wheeler batteries, where we've extended our brand. So we want to increase our touch points and again, look at a double-digit growth here. And there is competition in this industry, but we are growing with our strength of our synergy of our distribution, because we have a two-wheeler motorcycle oil and it goes with that in terms of outlets. So we want to grow double-digit. The vision is, of course, to take the turnover in the next 3 to 4 years to double. And also start, we are breaking even now in terms of our margins there. But we also want to look at that becoming a profitable segment, though it's a very small part of our business today.
Yes, but the street is betting a lot on that as well, and so are you. So can you give us a sense of by when it'll be profitable? Will it be next year? And when you say double-digit growth is what you're expecting, is it high double-digit or low double-digit? Just to get a sense of what this business would look like, say 2 to 3 years down the line.
These are conventional VRLA batteries. So these are not the new age batteries. This is a replacement battery we do. And we have a synergy with our distribution. So as we mentioned, it's about 80 crores. We're looking at about 200 crores in 3 years from now. So it's an add-on business, I would say. Our focus is obviously to continue growing our core business. And that is lubricants, automotive, industrial, which is where we are really making our market share gains. So I think battery business is an extension in terms of market share gains for us.
Right. And what about the EV capex? Is there anything that you have lined up?
Well, we have invested, as you know, about 150 crores in three entities. One is Indra, which is a global company, UK-based company, where we have investment from India and also a global Gulf Oil International. And that is something which is the AC slow chargers for cars, which is what we are planning to bring to India. The other is a company we got in October last year. We started and completed in December, is Tyrex, which is making fast DC chargers, right, from 30 kilovolts to 240. This is a very interesting investment we have made, and we work with the founders to try and increase this. They have about 800 to 1,000 chargers already established. This is about 100 crores plus we have invested with that. And that is where we see the fast charger business becoming a large part of the play there for Tyrex to become, they are a good competition there. They have a good position there. So this is potentially, it can look at, about 400-500 crores in 5 to 6 years in terms of revenue, obviously based on how the chargers develop every, buses, three-wheelers, fast chargers for cars. So the Indian market is going to evolve, and that's what we are looking at for Tyrex, where we are making investments in terms of the capacity, in terms of technology and the people.
Okay. Last question before we let you go. Wanted to understand the AdBlue volumes. What was the growth this time around? And what is the current market share here and the growth plans?
Yeah, so AdBlue is I would call it a supplementary product to our diesel engine oil, because, all the BS6 vehicles use AdBlue, which is a consumable. And we've been we had planned this many years ago, but now I would say the market is quite good. And, just to give you an idea, if you use 100 liters of diesel, you need to use 3 to 4 liters of AdBlue, because it helps to reduce the NOx emission in the emissions that come out. And this is, we have done, I think 37,000 KL in quarter 4. So it's a market that will keep growing 20%. And today, with our distribution strength, with our go-to-market strategies and OEMs, we are, I would say, in the top 3 here. And it's partly organized and partly smaller players also. So I think this is a business which is supplementary to us, and we use our distribution and our OEM relationships to grow in this. And I think there's a fairly good growth rate here. And we have seen a good surge, I would say, last year. But going forward, I would say we would anticipate about a 20-25% growth in this.
Okay, all right, 20 to 25% growth going forward in the AdBlue volumes. Thank you so much, Mr. Chawla, for joining us today and giving us that perspective on the business going forward. That's Gulf Oil Lubricants. By the way, just quickly take a look at the Nifty and the Sensex. Both of them have inched a little higher, and that's courtesy what's happening with the bank. So ICICI Bank, that is at the day's high, and so is Axis Bank. So a slight uptick which is underway. We'll have to see whether market builds onto that or not. We'll do one thing, we'll slip into another break. When we come back, we'll focus on some stocks buzzing in trade, so stay tuned for that.